Alright, Candle Range Theory Trader coming at you with another video showing you how to use fair value gaps with the Candle Range Theory. So let's get into it. What this video is going to cover is what is a fair value gap. I'm not going to spend a lot of time on that. How to use it, the power of one, decision flow, showing you how to trade this with our established system, some real chart examples, and then this video is in two sections, actually three, but mainly two. I'm going to, after the real chart examples, have an extra bonus section for advanced methods for continuation trades, but this is for profitable traders only, meaning that if you're still struggling in trading, the second half of this video really isn't for you. Okay, focus on the first part. All right, and I'll make a clear separation between them so you know where if you're a beginner and you just want to master one method before you move on to other stuff, I'll let you know. Okay, so we'll do that, and then one last bonus tip. So let's keep going. So I have to have a disclaimer and a credit to the original creators that I've seen with this method. They use it differently than I do, but it is what it is. Uh, and as well, this is not necessary to know. Okay, I have done well without fair value gaps. You don't need them. Okay, if you've mastered like the 15-minute entry model, which is what this video is built on, if you don't know what I'm talking about when I say that, the link is in the description. But as well, crediting ICT and Casper SMC. Those are two creators that really talk about fair value gaps often, and they also have videos on it. So if you want to look at them, you can. The only thing is they don't use it like I do, so be careful if you want to do more research on it. If you just stick to this one video, I promise it'll just be clearer to you. So the indicator again, once again, is the fair value gap. All it is a gap on a chart whereby the price has moved so fast that it has skipped over a couple prices. It's a 3 candlestick pattern, okay, on any time frame. For the majority of this video, it's going to be on the 5-minute time frame, okay. Now it does happen when a big candle moves and it leaves a gap between the high of one candle and the low of the next, but it's better seen than explained. So the idea as well is that once that gap occurs, the market might come back to fill it later. And if it doesn't come back to fill it later, we'll also talk about that too. So, like I said, it's going to be the fair value gap indicator by Nephew Sam. Now I'm going to show you how to add it to your chart on TradingView. So if I go over to TradingView, I have a naked chart here with no indicators whatsoever. You're going to go up to indicators. You're going to type in FVG. Okay, Foxtrot, Victor, Golf, if my military acronym serves me well for the military people. I'm not in the military, but anyway. All right, and then there you go. Okay, then you'll see these pop up. You don't have to amend the settings, but they're a little harder to see. So this is what I do. I click on it. I go to the gear icon. This is a free indicator. And what I do is I make the colors darker. I just darken the opacity. That's a personal thing. You can move it out the way so you can see it. I darken them a little bit. Not like 100% where you can't even see through them, but maybe like 30%, something like that. Again, that's personal preference. You don't have to do this. And then as well, the label position, I leave that, but I do have it a little bit bigger. Just the letters in the FVG are large either way. That part, like I said, the main part is this price level. Okay, that's where we're focusing on. So FVG, that's it. Those are the settings that I changed. Okay, so let's go back to our slideshow. All right, so now that we added the indicator to the chart, so now this looks the same way. So this is our 3 candlestick pattern. Candle 1, candle 2, candle 3. And you see here this momentum candle here. That creates the gap between this high and this low. All right, that's the gap. So that's our trading zone, okay? Because there's not a lot of buyers here or sellers. So everyone will look at it. Different people explain it different ways. But ultimately, we want to just see price retrace into this level if we're bullish and then keep going up. That's it. Same thing for bearish. You got candle 1, candle 2, candle 3. Price drops so fast that we want to see a retrace into this level before price continues downward. That's it. In line with our daily bias. Okay, so that's that. Now let's talk about the power of one. What is the power of one? The way that candle range theory traders should use fair value gaps is this. Okay, we are only going to trade the first fair value gap that is created after the money candle. If you don't know what I mean when I say money candle, when I use these terms, again, the link is in the description. You want to look at the video title, Retire Early Using the 15-minute chart. Okay, that talks about the money candle. But in short, the money candle is the candle that creates the high of the day or the low of the day. It's only one candle. Okay, So all we're focusing on is one candle and one fair value gap. You're going to see a lot of fair value gaps here, but you're only focusing on one. Keep it simple. Okay. So it is the highest or lowest fair value gap in line with your daily bias. If there's no fair value gap, you can't trade this method. All right. There's not going to be a fair value gap every single day on every single pair that you watch. It doesn't work like that. Okay. So, but let's see how it does look when there is one. So step one, is there a money candle above the higher prior high of the day? This is the prior high of the day right here. Here's our money candle that creates the high of the day right here. Okay. Step two, we make for the break of the money candle and then a fair value gap. It is created right here. Okay, it's that little gap of the space. That's candle one, candle two, candle three. Okay, this is that right there. That's the gap. So all the gap is going to do is just give us a trading zone. Okay, and sometimes it happens very fast. Okay, but the confirmation is that the gap should hold. This FVG, it can wick through it, but every time a candle closes, this is a 5-minute chart, no candle should close above the fair value gap. If it does, and you're trading this method, you have two options. You can either wait to see if the high of the day is going to hold, or you can just get out of the trade. But for the sake of this example, because the fair value gap held, obviously you just enter right there and just ride the trade on down. Okay. One of the best take profits is just going to be the low of the Asian session. That's fine. Or just shoot for a 1 to 2 or 1 to 3. But as you can see, small fair value gaps can offer tighter stop losses and bigger risk to rewards as well. Okay, so but again, step three, price retrace back into the fair value gap at 12:25 a.m. in this example, and then it did give you a slightly, well, it didn't go up to the gap here. You see, price did retrace in London. This yellow box is London session, but this is price action coming right out of Asia. So I just picked this just to show you where the fair value gap was. Now, the size of the fair value gap does not matter. Just because you see a huge fair value gap, that doesn't make it any more superior than a smaller one. All you're concerned about is price and what it's doing. Anytime price retraces into that fair value gap in line with your bias, you take it. Doesn't matter the size. Okay. So here's our decision flow for a 5 or 15-minute chart. So our step one, first thing is our daily bias. Okay. Go into each day with a bias. Okay. Know your direction so it makes it easier to trade what you want to see. So if the prior day is green on the daily chart, you want to go short. If the prior day is a red candle, you want to go long. All right. Next step, is there a money candle that has been created between 12 a.m. and 1 a.m.? All right, that's the ideal trading time frame. I like to start around 3:30 or so, but it's up to you. But typically Asian session, I don't try to find the high of the day during Asia. I just don't. Okay, so if the money candle's been created, what's next? Has the money candle been created above the high or low of the prior day? Okay, it has to be above the prior high of day for shorts, below the prior low of day for longs. That's very important. Okay, and then next, has a fair value gap appeared near the money candle after prices closed, above or below it? Okay, so all it is just the first fair value gap to see, not to beat a dead horse, but this right here. Okay, money candle here, fair value gap here. That is your trading zone right there. That's it. Okay, that's that step right here. Has a fair value gap appeared, and then if it has price traded back into it. Now, it will not always do this. Just because you see the gap, you think, oh, okay, well, price must go over there. It's not always going to do that. So it is what it is. All right. But if it does, then that's your entry signal. And if not, then you can either still take the trade. If you're still going to take the trade, just put your stop loss above the day's high or below the day's low if you're long. Okay. So you want to enter when price goes into the fair value gap, and the stop loss can go right above the fair value gap. I wouldn't necessarily recommend it to have it too tight because price can wick through the fair value gap and then close below it or above it. But at the end, every single time the candle closes, the fair value gap should still be there. So you may see it disappear temporarily on your chart, but then when the candle closes, it's going to reappear. All right. So here's some real chart examples. So let's go through our steps. This is for a short. Okay, so we have our Asian range here, money candle at the prior day high right there, and then close below it. Awesome. Our fair value gap doesn't appear until 240, but this is the first fair value gap right here. Okay, so that appears, and then price retraces it, barely touches it. Now you might be wondering, well, where can I get in? Where's the entry in the fair value gap? Because this is a bigger one here. You can enter anywhere. It doesn't matter. As soon as you see price start to tap into it, you're good. To go ahead. But again, as far as stop losses go, this is when it would have been good where the stop loss could have have gone outside the fair value gap because, as you can see, price never even touched the top of the fair value gap or the money candle break. It was just strong momentum to the downside, and it just kept right on going. So the fair value gap was created at 2:40 a.m. You can enter around 2:50 a.m. Stop loss above the fair value gap in this example for a 1 to 2. How do we know the trade is good or legit? We should hold on to it. The fair value gap holds. Okay, it does not. No candles close above the fair value gap for a short example. Let's take a look at another one. Prior day high is all the way over here. We love to see that. I'm gonna take a quick drink of water. My throat is very dry. Okay, so there we go. So now we have that. Where's our money candle? That's the next thing we're looking for. Where's the high of the day and the candle that made it? It's this candle right here. Okay, do we have any fair value gaps? We actually got two. Our only concern is the top one. If they're two back to back, I mean that's fine, but the highest one should hold. So the perfect entry was right in here between 3 a.m. and 3:10 a.m. Sometimes price moves very fast at these levels, so you got to be ready. Okay, so trading that, you see, you went right into profit. Boom, you were out in 5 minutes. Okay, this is a 1 to 2 or 1 to 3. All right, this was a 5-minute trade. Done. That's the power of this. Okay, but again, it's in line with your daily bias. Yesterday was a green candle. So on the next day, you want to go short above the prior day's high. That's it. Fair value gap, 1 to 2, 1 to 3 max, you're done. But take a look, word to the wise. Don't get greedy because as you can see here, price hit the daily open price and then retraced almost right back to your entry. So take profit, okay, while you can. Otherwise, this could be you. You think price is going to go down forever. That's not how we trade, guys and gals. Okay, you only want 1 to 2, 1 to 3 max. We get in and we get out, go on about our day. Okay, all right. So now let's take a look at a couple longs. Okay, so we have our prior day low all the way over here. All right, price is chopping around below it. We love to see it. Where's our money candle? Where's the low of the day? Bang! It's right here. It happens at 8:05. Now, where's the first fair value gap? Bang! It is right here. Okay. Now, this one, you would have had to wait a little bit because this is the break of the money candle. We're not trading any of this. We're not trying to chase. Price doesn't retrace until 1 p.m. Okay, so this is a long time. So what's the way around this? Just set a price alert around the fair value gap. Okay, it came close right here, but a better entry is right here. Okay, and even though you see how price it drove a wick down, this is why you don't set your stop loss too tight. Because if you just set your stop loss too tight around the fair value gap, you would have got stopped out. But price respected the fair value gap in the 1 p.m. to 1:15 hour and then shot straight up. This was good for 1 to 2 or 1 to 3 with a tight stop loss. In this case, the better stop loss would have been below the low of the day. The main non-negotiable is going to be the low of the day if you're long. If the low of the day gets taken out and closed below, you just take the loss. Okay, you're done. That's it. Okay, here's another one. Let's see here. Prior day low is right here. This was a Tuesday. Okay, so we got that. We had a long bias. Where's our money candle? It's right here. Okay, right here. Money candle happened at 7:45 a.m. So now, where's the first fair value gap? I'm only looking for one. It's this one right here. All right, so this is my trading zone. That's all this is. It's a trading zone. Okay, so the break of the money candle happened at 8 a.m. And then price retraced back down into the first fair value gap, the lowest one between 8:45 and 10:30. So you had plenty of time to grab it because as you see, price went down into it, but it never closed beneath it. So you just have constant wicks, wicks, wicks. These pins or wicks to the fair value gap is a great sign that you're in the right portion of the market. And this would have been good for a good 1 to 2 risk to reward. You could have entered really anywhere between 8:45 and 10:30. Anywhere with price chopping around in here. That's the trading zone right there. Some people drop down to lower time frames. You don't really have to. That's up to you. I don't. I'm not going into a 1 minute chart trying to trade this fair value gap. That's really not worth it to me. If I see price going down into it, I'll just go ahead and hop on in. And this is another case where your best stop loss, if you could have got in down here, to just set it below the low of the day. But your main confirmation is the fair value gap holding. Okay, so fair value gaps can be good, but they should not be the foundation of your trading. For our trading system, these are the concepts that we employ in order of importance, and it's just the decision flow. Your daily range, your candle range, okay, candle range theory, your daily bias, the money candle, the break of the money candle, then the fair value gap. Fair value gaps comes absolute last. So do not put it first. It's last. It's the least important part of this whole thing. You may not even get a fair value gap and you can still make money. So don't make it the main thing. So for the beginners, this is where this part concludes, and then I'm going to work with the advanced traders. Okay. So in conclusion, this method is just using an established trading zone to help you see what to trade. People like indicators because it helps them see what they should be doing. That's fine. Okay. But I believe the best indicators, if you're going to use one, should go on the chart. I know, well, I'm not going to get into that. All right, so price can wick into the fair value gaps, but remember it has to respect it. The fair value gap should always be there every time a candle closes on your 5 or 15-minute chart. Okay, price will not always retrace into a fair value gap. So while you can set a price alert, if it doesn't hit it, then oh well, it's just trending. There's too much momentum. It's not going to come back. No big deal. Wait for the next one. Okay, fair value gaps are only good for one day only. If it doesn't retrace into the fair value gap you're watching the same day as the money candle, there's no trade that day. Don't try to choose a fair value gap from Tuesday and trade it on Wednesday. No, it's not what I'm teaching you. Don't do that. Okay, so this can be great for big risk to reward trades because fair value gaps, if you get a small one, it can give you a real tight stop loss. I wouldn't recommend making it too tight because you're going to get stopped out more. So give it some wiggle room because as I've showed you, it'll wick it. But as long as the fair value gaps get respected, you should be fine. Never forget the power of one, okay? Because you're going to see a lot of fair value gaps. All you're looking for is that one money candle and one fair value gap. That's it. All right, and that's it. What I'm showing you right here is enough for you to make a bunch of withdrawals. You don't even need the next part. All right, so you really don't, especially if you're a beginner. Now, if you're a profitable trader, if you have a good grasp on the candle range theory and you know what you're doing, this part is for you. All right, so beginners, you can knock off. I promise, master this and then come back. But for everybody else, let's keep going. Now, this is the advanced method for using fair value gaps with the candle range theory. Okay, this is for if you have your daily bias and your daily bias is right, can you still trade? Basically, you've missed the high of the day or low of the day. But this is the main catch with this. For these fair value gaps that we're looking for, they all need to be the same color because they're going to show the most momentum. To me, it offers the best odds because you're going to see a lot of fair value gaps, but you want three reds or three reds if you're short, three greens if you're long. Let's take a look and see how that looks. First with the shorts. Okay, now this is the daily chart. So once again, daily bias right here. Okay, this big green candle gives us a short bias for the next day, which is right here. But let's say you come to the chart and you've already missed this price action up here. It's already dropping. What can we do? Okay, how can we get a piece of this move? We don't want the whole move, just a piece. Let's take a look. Okay, we missed the high of the day. The high of the day came in Asia. I don't trade Asia. Is there still a trade for me? Yes, there can be. What am I looking for? A three candle fair value gap, but all candles have to be red. Okay. Now this one right here, I know you're thinking, okay, well, I see a fair value gap right here. Why can't you trade this? You can during London, but I choose not to because this is a 1, 2, 3. This candle right here is green. Okay, now so if you want to trade that, you can. And as you can see, it worked out. I just prefer 1, 2, 3 right here. All of them red because to me that shows more momentum. That's the only reason I say that. Three colors just makes it easier. So that way I'm not trying to trade every single fair value gap I see because that can get very confusing. So for the way I trade and the way I teach, just keep it simple. Three red candles if I'm short, three green candles if I'm long. Those are the only fair value gaps I'm trading to keep it simple because while both of them worked, I'm only focusing on one, this one. Okay, so three red candles happened during London, and the entry would have been between 5:30 a.m. to 6:20 a.m. right here. You see, it gave us plenty of time during this consolidation to get in. The fair value gap held, and then it just tanked. This would have been good for 1 to 2. Let me go back to that. Okay, this was good for 1 to 2. Um, so there you go. Stop loss above the fair value gap. And again, for this one, you just want to make sure the fair value gap is respected. All right. So it shouldn't be closing above it. Next one. Actually, and this is actually the same day. I'm sorry. This is the same pair because this is still this. This is Aussie Canadian. So there were two chances to catch a piece of this big red day. That's the first one. This is the second one for the New York session. I needed three red candle fair value gap. 1, 2, 3 right here. Okay, price dropped, retraced, okay, back into it, and then dropped again. It takes out these lows. Love to see it. Okay, this was good for 1 to 2. Why do I say 1 to 2? Guys, you don't need big moves to make a lot of money. If you can master getting 1 to 2 and your account gets big enough, you can quit your job. Because if you can turn $50 into 100, then you can turn 100 into 200. You can risk 1,000 and make 2,000, etc., etc. Okay, so 1 to 2 is really all you need, I promise. So, but there you go. Okay, so once again, 3 red candle, fair value gap. That's my trading zone. If it gets there, I trade it. I will just set a price alert at the bottom of the fair value gap. But if it doesn't hit it, then there's just no trade. I can't trade that day. No big deal. Okay, but this is still in line with the daily bias. So you had 2 chances on this one pair. This trade during London, this trade during US. Both of these charts here I'm showing you is this day right here. So that's the power of that. But this is an advanced strategy because I'm not trading off the high of the day. I'm trading in line with my daily bias. Okay, so let's take a look at another one. So we had a green day here for Wednesday. So the next day, whoops, sorry, next day is Thursday. So the chart I'm about to show you is this red day right here. Because sometimes you'll come to the chart during London, you'll see all of this. You didn't get the trade this. You didn't get to catch the wick. Is there still a trade we can get? Yes. All right. We're looking for the 3 red candlestick pattern right here. Here's one, 1, 2, 3. I'll set a price alert right here. Okay, and then I'm not trading. So while this was set actually during Asia, not even during, well, not a little bit after Asia, but it retraced here during the USA session between 11:15 and 11:30. It came quick. See, small little gap, but 1 red, 2 red, 3 red candles. So you set a price alert right here. You're not trading all of this. You're only trading this right here. Okay. Now, I know you're wondering, well, hey, what's up with this red fair value gap right here? Can I take that long too? And no, because that's not our bias. Our bias is short. Okay. I don't care if it pays out. I'm only trading my bias. If my bias is short, I'm looking for a 3. And if I miss the high of the day in Asia, I'm looking for a 3 red candle fair value gap. I set my price alerts. That's what I'm waiting on right here. That's it. Let's take a look at a couple longs. Okay, so prior day is red right here. So next day, I want green. If I miss the low of the day on Friday, what can I do? Okay, we missed the Asia entry, but we have 3 green candles that created a fair value gap during London. Right here, 1, 2, 3. See where that arrow is? This fair value gap. So that's my trading zone. I wait for price to retrace into it. It does that, and then I expect it to go up. All right, but this is the only. You see these gaps here and here. The price never even went back down there. So how can I trade something? The price isn't even there. Okay, this is what I'm looking at right here during London. So even if you miss the move in Asia, you can still catch something in London or possibly USA session as well. But in this case, this was our entry with a tight stop loss because again, this gap has to hold. That's a non-negotiable. So if you're taking continuations and the gap fails, get out. That's your sign to get out. All right. Your bias still may be right, and you may get another entry, but for the sake of this one, the gap has to hold. All right. And then you get second chances. So sometimes I promise some of these will fail, but you have. Well, look at this. 1, 2, 3 green candle right here. You have 2. This is your next strike zone right here, and then you take it again. All right, so if you have other fair value gaps that fall in line, again, have to be the same color just to eliminate confusion. You get a take a second shot, and then you just see if you can catch a continuation. So don't give up if you get stopped out. That's my point. All right, next one. Okay, long bias because the prior day candle was short. This was on Friday. This was Thursday. This was Friday. So how can we miss? How can we capitalize on it? Okay, so we have a 3 green candle fair value gap in London right here. 1 green, 2 green, 3 green, right there. All right, now that was during London, but our trade didn't come until all the way over here. Okay, all the way over here. I'm going to show you real quick how to extend these out if you want. Sometimes it can make your chart messy, but I just drew a rectangle to show you the trading zone. Again, you set a price alert at the top or around the fair value gap, so you know. And our entry window was 8:45 to 9 o'clock a.m. All right, right before USA session started. Boom. Very tight stop loss because remember this gap has to hold for the trade to be valid, and then it just takes off. This was good for either 1 to 2 or 1 to 3, either way, and you know that's pretty much it. All right, so this candle, this chart is this trading day right here. All that, a portion of, not all of it, but a good portion of that could have been yours. All right. So this was Friday's price action. But again, it started with finding a 3 green candlestick pattern in line with our daily bias. All right. So in conclusion, my advanced traders out there who set trading these continuations, this works best when the move has already occurred during Asia. Okay, in line with your bias. The 5 minute chart, both charts I showed you were 5 minutes. You want to focus on London fair value gaps, those good, and the 3 candles must be the same color for the best odds. Stop trying to catch the whole move. Okay, you can quit your job just trading 1 to 2. Okay, if you can master risking $1 to make two and just keep building that up, you'll make all the money you need to. Okay, and managing risk. All right, now New York fair value gaps, use those as a last resort because sometimes New York is good for reversing instead of continuing. So just be careful with New York. The best ones come in London. Now the non-negotiable here is the fair value gap must hold. Remember, if a candle closes below the fair value gap, your trading zone, exit the trade. Okay, exit the trade. All right. So let's see. But if they do hold, that's a good sign. And as well, if lower fair value gaps are holding, see this one right here, price never came back. This one over here, price never, well, it came back right here. But I'm not teaching that because you had a red candle, green candle, green candle. You know, did it work? Yes. But would I trade it? Not for continuation. Okay. All right. So now if the fair value gap fails, the trend for the day may be reversing, and the strongest support or resistance is always going to be the higher day or lower day. Okay. So one last bonus tip as well is scaling in. Another disclaimer, this is high risk. If you don't understand how margin works, you can blow your account. But how do you scale in or add to your position with fair value gaps? This is one. So let's say hypothetically you have a long bias on this pair here. It's a dollar yen 5 minute chart. You take your first entry right here. Boom. All right. So this one, you don't even care about fair value gaps because you just want to see it close above the money candle. Now, so you got your first entry right here. Now let's just say you're just risking $50 and you do a 2-3 lot size. Your stop loss is like 30 pips below the low of the day. Price drops around, looks good, and then bang, all of a sudden you get a 3 green candle fair value gap, and then price trades right back into it. Now you want to add to the position here, so you take a secondary position right here. Okay, at the same lot size, risking another $50. All right, so now your total risk is $100. All right, so let's say you take Asia as your take profit, which is right here. That's why the take profit line right here is right here at the Asia high of the day, okay, or Asian session high. On that first entry, you would have made $166 if price gets to the Asia high. On the second one, you would have made $118. So you would have risked $100 and you would have made $284. So you would have made $284 just trading one pair in line with your daily bias using a fair value gap to scale in or add to your position. All right. I'm not going to spend too much time on that because that's just one example. But again, this is risky because if you enter secondary and then price keeps dropping, obviously you can either get a margin call or get stopped out. So be careful with this. A better thing to do is possibly use a smaller lot size than your initial entry. But it just depends. All right. But can it work? Yes, you can use fair value gaps to scale in. But again, if you don't know what you're doing or you don't understand that, don't even bother. Just stick with just one entry right here. Would have been fine. You would have risked $50, made 166. That's great. That's close. That's a 1 to 3. That's excellent. Okay, that's better than 90% of traders. All right, so don't try to master scaling in. If you can just master doing one entry, with 1 to 2, again, that's more than enough. But fair value gaps can be used as a tool to help scale in, but do your own research on that. So I appreciate you watching. Please like and subscribe. Guys and gals, the sky's the limit with this thing, but you got to put the work in, build your library, do your screenshots, do everything you can to be successful. I'm here to help and cheer you on. But thanks again. Have a great rest of your day.